Hey traders, Raghee here. Happy Wednesday, everybody. Hope everyone is doing well. All right, so let's get to taking a look at our pre-market, get ready for our trading day. And just as a reminder, especially if you're brand new to the room, really simple way we can take a very small amount of time. It can be as little as an hour, it can be as much as two. And what we do is we break down the trading day so we can prepare for the morning, know what kind of hot zones are coming, whether that be data, FOMC, earnings, whatever it might be. And we can tackle that pretty quickly, and like we will do in the next 20 minutes, sort of our opening bell intel, right? Hot zone, sentiment level, symbols to watch. By around 9:40, the first 5 to 10 minutes of the morning have kicked off. The volumes have increased across the symbols, the spreads have normalized, and we can get to work on our day trading. Now, between 9:40 and about 10:30, I'm going to watch those 5-minute time frames for day trading opportunities. If they set up, great. If they don't, no problem. Because what we also want to do in the morning is, while I have a 3-chart layout usually on my screen with the chart that is best for the strategy, day trading as a 5-minute, I'll also keep an eye on the 1 hour and the daily off to the right, smaller, but so I can keep an eye on what might be setting up after we come back from break and start to take a look at our swing trades. And that really is the heart of what I do. I get a lot of questions about, Rob, what are your favorite trading styles? And the truth of the matter is, whatever keeps the lights on, right? You know, it's a funny thing. Cash flow. I know that sounds silly, but I was watching a video on YouTube. This guy, maybe some of you know him. His name is Alex Hermosi, and he did the biggest book launch in the history of ever. Right now, his book, after roughly a 72-hour kind of book telethon, is 5th in all-time sales of books after 4 Harry Potters. That gives you the idea of the scale. And the one thing that he kept coming back to, I think, applies to traders too. Cash flow. Or I think more succinctly put, whenever I start going down a rabbit hole, whether it's a rabbit hole of an indicator that I want to develop or a way that I want to teach, the whole idea is what I'm doing resulting in at least my getting towards my goal? Is what I'm doing resulting as a trader in cash flow? Is what I'm doing as a long-term active investor resulting in great prices that are appreciating? Those are things that I think for a lot of traders, the only thing that matters, frankly, at the end of every month is, what was my risk? And sorry if there's some background noise today. I think the mic should be able to take care of it. But am I managing risk? So is my average loss greater than my average gain? That's the biggest metric, because sometimes my win rate could flirt with around 50%. That's pretty low. And that's where I know that either there's a lot of chop or a lot of volatility. But even with a 50% win rate, if my average loss is smaller than my average gain, I'm still going to have a positive cash flow month. And he kept coming back to that theme to business owners, because a lot of times people do the things they want to do. They don't do the things that lead to cash flow. And, I've probably been guilty of that too, to some degree. But if I come back to kind of one of the great things the Trish Boss says, we all know and love the Trish Boss here. How is that working out for you? And maybe that's, kind of my message as we go into what's been a difficult August, which is, what I'm doing working towards my goal, which is cash flow. Now, from the day trading perspective, it's been pretty quiet this month. It's not been great. It's not been bad. It's really just been ineffectual in terms of that cash flow. It's not hurting. It's not helping. There are going to be months like that, and August is most definitely one of them. Swing trading, we've had a couple really nice winners, whether that be FLR, Google. We've had a handful of disproportionate winners, and really, frankly, a larger handful of just these tiny paper cuts. And it's been a tough month in that regard. Then I step back to my third kind of cash flow, if you will, and that's my long-term trading. That's my position, the positions I take on a weekly time frame, of what we call that is the longer-term account growth strategy. Weekly time frame, leaps, shares, and that's actually been fantastic. When I look at, okay, Rob, Was it day trading that grew the accounts this month? Was it swing trading, or was it the long term? The long term is absolutely in fuego right now. So if we keep in mind that all of our different trading preferences, trading strategies should just be measured by that litmus test. Am I losing more than I'm making? And am I ultimately positive cash flow? That's all that matters. And I know my business owners get that, right? It shocks me to this day, and I see it all the time. How many business owners do things at negative cash flow? They keep things running for some reason of, I'm imagining, ego. I got to do this thing, and then I said, well, you think back, does that actually add to the business in some way, whether it be lifetime value or whether it be some way of an upsell? Business owners know this. So if those of you, and it's interesting, lots of traders are entrepreneurs. I know a lot of you resonate with, of course, Raghee, if I had a negative cash flow business, it's got to somewhere feed, the company. And most of the time it doesn't. And it's a ginormous ego that keeps us from doing that. If I had a strategy as a trader that did not work and I just felt like doing it, what am I doing, right? And I just thought a lot about that watching Hermosi. So we split up our day into 3 pieces, right? Sometimes a day trading is going to be great. Sometimes it won't. Same thing goes at swing. Same thing goes at long-term account growth. All right. So we are going into probably the most interesting week in August. And it's really reduced to 2 days. Well, 3 if you want to count today. Today we get the FOMC meeting minutes at 2 p.m. Eastern. And this is like being a fly on the wall at the FOMC while they're making decisions. Now, mind you, it's extremely curated. Before it was kind of a rough look at the dissenters and everything else, but now it's pretty well manicured to not show too much vehement dissension, but it will show traders and investors who was favoring a rate cut, who was not, and how that discussion went. So it's kind of the behind the story of the previous Fed meeting. That's coming in at 2:00. Now, the timing of that's really interesting because we will get some FOMC speakers today. I think just the one, Waller. But tomorrow starts day 1 of the Jackson Hole Symposium, where we will hear from lots of FOMC speakers. Day 2 of Jackson Hole is Friday. And that's where Friday morning, 10 a.m., we're going to hear from Powell. And that's going to be basically the stand-in for the FOMC press conference. We don't have an FOMC meeting. We only have meeting minutes, which are the notes from the previous meeting. So we'll get this stand-in in Jackson Hole, and that's going to really be as close to a press conference and hearing from Powell himself and getting an idea as to whether or not they're going to cut rates in September, which is still largely expected. Not as much as it was before, but it's still at or above 80%. Let me take a quick look at it while I'm mentioning it, because I'm curious if it's changed much. Let's see. So let's refresh this. This is the Chicago Mercantile Exchange FedWatch tool. And yeah, it's still over 80. It's still over 80. It's not that 99% we had some time back, but this is still fully discounted. And this puts the pressure on the Federal Reserve to either talk this down if they have no intention of cutting rates, or if they don't want these rate cut expectations as high as they are, they're going to have to talk it down. And what a perfect opportunity Powell has on Friday. And we've seen those days in press conferences. We call it the purple tie day on the FOMC presser, where he just wakes up and chooses violence. We've seen him walk the market down. We know he can do it. Friday would be his chance. There's been a little bit more Fed drama this morning. FOMC Cook, there's some question about mortgages, whatever. I don't care what the woman is doing. Here's what I do know. She is a voting member, and there's been some political outcry for her dismissal. I don't care about politics. It has no place in trading. However, just like when Powell was being discussed to be replaced, we saw how crazy yields, dollar, and the indices were. This is a milder version of that. FOMC Cook, Lisa Cook, is a voting member this year. And so what we have right now is this morning, you could see it this morning. This is when the news came out. We've recovered fine since then, but it is a little bit of a sudden volatility thing that we're going to have to be aware of. So drama, politics, it's been incessant through August. And obviously, these kinds of things add volatility and sometimes illogical and slightly unrelated. I mean, should Apple sell off because there might be an issue with an FOMC voting member? Probably not. And yet that's the way the markets move. So be aware, there's been so many challenges to August. Least of all has been the typical low volume of this time of year. But this is what we've got. All right, so let's jump into it. My Sector Secrets Mastery members, I sent out the recap from yesterday. You'll see I have 2 open positions as we go into today. And all 4 indices are still below the previous session close. The Dow was the one that had the uptrend. It is the strongest index. And actually right on the bell, YM is climbing above the previous session close. So let's talk about why I talk about the PSC so much. Previous session close is the previous session close. I called it line in the sand a lot. And, what does that mean, right? Well, I just figured I'd call it what it is, previous session close. So when we're above the previous session close, there's largely a more bullish outlook, a more bullish discussion about whatever it is that we're looking at when price is above it, previous session close. So when things are below the previous session close, the climb higher is more arduous. The slope is slipperier. And when we're looking for buys, and you can see right here, remember that follow through for bullish setups are higher probability above the previous session close, while bearish setups are higher probability below. So when we're seeing the previous session close sort of between our setups, it's going to be a trickier day. I know a lot of the Sector Secrets Mastery folks realize, hey, Rag, I know it's on a hard and fast filter in the room, but I'm certainly starting to understand that I should go lower position size if I have a buy below that previous session close, or if I have a short or long puts above it. And I know a lot of folks are learning that that sentiment line in the sand, that previous session close, is a very simple, non-indicator, easy to know level that can really help traders find high probability follow through. Another thing with follow through, I've been getting a lot of questions lately about the clearing range. We've talked a little bit about how during the first 30 minutes of the day, we have what's known as the clearing range or the opening range. And, the person I learned the most about regarding opening ranges and clearing ranges was a book back, I think, in the late 80s or early 90s. This book is, I think, it's no longer in print. They didn't print that many of them. And if you go to Amazon, it's $1,000, $1,200 book now because it's out of print. But it's a guy named Toby Crable. And Toby Crable probably did the most work on what he called opening range or ORB. And I still think to this day, he's probably the foremost best at explaining that. But one of the things that I will tell you all about clearing ranges and opening ranges is that the new generation of traders typically has no idea where the original ideas came from. So become it. How many of you loved history class in school? I loved it. Sometimes I wish I majored in history rather than double majoring in English and psychology. Sometimes I wish I did history. So become a student of the history of trading, and you're going to find very little is new out there. So one of the things people ask me about the clearing range or the opening range is, okay, Rog, you used to do a lot of this. I followed you 5-6 years ago, but I would specifically do it usually after the market was compressed, because opening range breakouts or clearing range breakouts are really kind of a Momo trigger, and they're best done from compressed markets. So become a student of history. We can dive into that conversation at some point in the future, but I see a lot of folks looking at the first 30 or first 15 minutes, and they don't really understand that that setup has structure. And one of our main tenets in the Sector Secrets Mastery, and this should be for everybody, right, is structure. What is the market structure? Up, down, choppy. Structure dictates strategy. So a lot of traders just start applying their strategies to their favorite symbols rather than something we talked about on Monday, which is putting together a ranking of symbols that are most likely to follow through, the relative outperformers, and then applying the strategy to that symbol that best matches the structure it's exhibiting. So if I have a bullish chop, it's a slightly different setup. If I have a bullish trend, it's a slightly different setup. both are long calls, but they're going to be triggered at different spots for different reasons. And the only way we can apply a strategy accurately is if we do that. Now, let's talk about our strategy here in the morning. So first of all, I'm going to note that the YM is climbing, which we already have. It's been climbing above the PSC since the open, since the bell. So I'm going to put that here. All right, another thing I want to note is the NASDAQ has been sinking. NQ has been sinking since the bell, right? NQ has been sinking since the bell. And when we look at things like this, NASDAQ climbing, Dow climbing, NASDAQ sinking, how many of you remember how we look at the ES and when we look at the ES? So let me ask my mastery folks, would we look at the S&P today with the NASDAQ sinking and the Dow climbing? Would we look at something like that? No, exactly. So avoid, what did I just do there? No, can't. There we go. Avoid the ES when the YM, the Dow, and the NQ are moving opposite or not moving together, right? Because what's going to happen is the ES is going to be caught up in a tug of war, right, in that scenario, right? Okay, so I'm not going to be interested in the ES. However, if the Dow's moving higher, what sectors are a little stronger here this morning, right? Dow sectors that could be moving higher. Well, I would look for financials to move higher. I would look for industrials to move higher. I would look for transports to move higher. Maybe even energy. That would potentially move higher, right? Because those are sectors that are weighted in the Dow. Now, the Dow is not weighted like the NASDAQ. In fact, that's why things like the markets are higher or the markets are lower is just categorically incorrect, because there's no such thing as the markets, right? There's only NASDAQ, Dow, S&P, Russell, or whatever indices you look at. And then there are the stocks and sectors that are weighted within them and the percentages that they're weighted. The other day I heard someone say, and I don't remember what it was, but something along the lines of whether Tesla can save the NASDAQ. That's inherently incorrect, because it doesn't have enough weighting to have influence over the NASDAQ. Now, Tesla could have influence over consumer discretionary. It has the weighting there. So it just reminds me that how the indices are structured and weighted is still something most traders are completely unaware of. And they look to say, well, if it's a Mag 7 or Awesome 8, it's going to be able to move the NAS. And that's not true, right? That's really not true. Microsoft, Apple, and NVIDIA, those are your three 800-pound gorillas, if you will. But aside from that, the different Mag 7s or Awesome 8s, if you include AVGO, are going to be a little bit more sector influencing, not index influencing, right? By the way, we did hit our first target in XLU, and I will tell y'all straight up, in this room, we never sweep losses under the rug. I keep a tally every day in the alert section of the recap. You know if I made money, you know if I lost it. I'm not taking any trades that we're not talking about in the room. And it's nice to have a little winner in XLU. And that one gave us 2 days to build that position off the Darvis. Nice to see that one moving higher. All right, so if I take a look at XLU here this morning, there it is, moving off our, and this is the classic Darvis pre-Momo setup, right? What this means is I looked at a pattern that's automated by those yellow lines, looking for minor highs and minor lows within a set amount of time. And when that happens, it's basically a modern day Darvis. It's not a classic Nicholas Darvis box, but it is a modern day Darvis box. It's definitely inspired by the things that I learned about Darvis back in the late 80s. So now we know that it's likely to have more momentum coming off that floor. So rather than waiting for the momentum to break through the highs, which is what the vast majority of momentum traders do, something's making a new high, let's go get some. Instead of that, we say, what has the probability of attracting that attention and attracting that momentum? And we just play the probabilities. And I'll tell you, probabilities in August have been tricky. But if we can continue to manage risk, if we make risk management our first job, again, we'll be fine. Because obviously, Cash flow, as I talked about, is super important, but managing risk, cutting out those negative cash flow things, which I'm telling you right now, I see it firsthand all the time. Most business owners are completely unwilling to do that. What we want to do is remember we're business owners and say, look, if something isn't working, well, then just stop it. Find out why it's not working, but stop it. Cut it loose. It's gangrene. So if I know that I'm in a downtrend and I try to do this, that's gangrene, right? If I'm in an uptrend, even better. If I'm in bullish chop, that's absolutely applicable. And the probability of that bounce is far, far higher, right? That's what we're always trying to do. And it does require a lot of one of two things. I need people kind of pushing me to say, Rob, could that be better? You can do this better, right? And I love the community that we have in the mastery because we're all pushing each other, right? We're all pushing each other to be better, stick to the rules, let's stick with the process. And that community support, that accountability makes a huge difference in trading, because if someone's left to their own devices, or worse, in an echo chamber, they're never going to make those adjustments, right? So it's our job to sort of lovingly push each other. And I love when y'all push me, right? Lovingly push each other in the direction of, let's stick with the process. Let's stick with the relative performing watch list. Let's stick with our setups and know that if we do that at scale, the cash flow is going to be there, right? So that's super cool that XLU followed through, and hopefully you get a good idea of the kind of setups that we're looking for in this environment, which is still largely either trending or bullish chop. I'm not bearish at all at the moment. All right, what else am I looking for? Well, the NAS continues to drop. Russell's dropping. Dow is a little strong. So, and gold is strong too. So what I'm going to do is we get past our kind of opening bell intel. We're going to take a look at gold. We're going to take a look at gold miners and probably some Dow outperformers. So that's what's going to take us through probably our day trading morning.